look at the chart all the way into November, when it makes that first break higher, you'll see that it runs up. And then if you think to yourself, hey, I'm going to buy a breakout, what you end up having to sit on is that moving average. And that tighter moving average works well, but when it breaks, you have to give it a little bit of room to recover, right? And so I like this pullback because it really is coming on lighter volume, and it's pulled all the way back into that 70-ish area that there's a lot of support for in general, because it's come back to the 70, failed it, tested it, came back, failed it. Exactly. And so those sorts of things tell me, you know, when you're intraday trading, you call that a balance zone, where everybody comes in and they go, okay, I'll agree that it doesn't need to be cheaper than that. And I'll agree that it doesn't need to be more expensive than that. And so that creates a balance. And when somebody says, I'm ready to get out of that, everybody turns around and goes, all right, let's go. Let's go until we find the next balance. But very often we come back and we test these areas over and over and over again, because traders are nervous. They don't see a rise that continues, unless, of course, you know, we're talking about 6 or 7 stocks in the market.
Right, right. So how might we leverage the power of options to take advantage of a trade here, Anne-Marie? This is a stock in a strong uptrend, light volume pullback to a key level. What should we be doing?
My favorite thing to do in this environment would be the short put spread. And what it does is expose you to a place where the market might be a little herky-jerky, but you'll still be able to make income from the theta erosion of the chart. Here's a very interesting thing you can do. When you put your option spread together, and we've sold the 70 and bought the 65 that expires in September. Sorry. I have so many things to think about that occasionally my brain goes to sleep.
Not a problem. So looking out several months.
Yeah, just a few months. So it can erode over time. And if it does one of these things, like it did in March, where it chops around, heads below, heads back, chops around, heads below, heads back. Exactly. It ends up recovering into the space. So when you build that, one of the things you can look at when you sell your 70 and you buy your 65, you're going to see a cumulative delta reading. And that number in our case is around 13 or 14. What it is really is it adds the negative delta to the positive delta, and it gives you a net delta. And that's the exposure to the market. But it also tells you the probability that you're going to be right. And so this notion that we can use for the delta, which is the probability of expiring in the money, is what it always tells us. Ours says 13.5%. And so that means there's about a little bit over an 85% chance that the spread is going to work for us. And when the percentage of winning is that high, we have a tendency to collect a little bit less credit, right? There's always a push and pull in terms of risk to reward. So this one looks very nice to me. It's got time on its hands, and it also has a very strong current to the upside. It's the reason I love the short put spread in an environment like this. It's almost textbook entry point.
Great. And so the expiration here would be the September 15th. And how would you go about playing out that trade?
September the 15th.
Yeah. So when would we look to close the trade?
So here's the thing. If the chart moves all the way up into, say, 78, 80, right? And you see it coming back to the 75 area, the 74 area. If the broad market is also trending higher, you can literally leave this one all to continually erode, and you might buy back at a nickel, right? If it continues to move up. If it starts being whipsawed a lot up in the top of the range, you might want to cover it when you've collected 50% of the profit, right? When I am at my most conservative, I'll look for a 50% move and I will leave the trade. And so we collect about 122 here. So it's about 60 cents on that space. But when the chart is well behaved, you can literally leave it alone and just collect. So it really is all about it holding that 50.